Hello and welcome back to Explain the Charts. Today is October 9th, 2025, and we are diving into an absolutely historic week for XAUUSD, or gold. The headlines have been explosive, with spot gold prices surging past the psychological $4,000 per ounce mark for the first time ever. This record-setting rally isn't happening in a vacuum. It's being fueled by a potent mix of fundamental factors. First and foremost is the rising uncertainty over a prolonged U.S. government shutdown, which is delaying key economic data and fueling a flight to safety. Markets are also pricing in a staggering 94.6% probability of a Federal Reserve rate cut this month, which lowers the opportunity cost of holding a non-yielding asset like gold. Adding to the bullish sentiment are falling U.S. Treasury yields, persistent geopolitical tensions, and very strong central bank buying, particularly from China. This combination of factors has created a perfect storm, pushing gold into uncharted territory. Now, let's look at how this narrative is reflected on the daily chart. As you can see, the uptrend throughout 2025 has been incredibly powerful, but the recent price action has gone almost parabolic. We saw a major breakout from an upward channel around the $3,600 level, which then served as a launchpad for the subsequent moves. The price decisively broke through $3,800 in late September and then accelerated towards our current levels. Yesterday, on October 8th, we printed a new all-time high of $4,059, a monumental achievement for the bulls. However, the daily candle shows a long upper wick, indicating that sellers stepped in at those highs, and we have seen a pullback since. This is classic profit-taking behavior after breaching such a significant psychological level. The key question now is whether the $4,000 level will turn from resistance into solid support. Looking at the bigger picture, the breakout point near $3,800 remains a significant long-term support level should a deeper correction occur. To get a better sense of this pullback, let's switch to the 1-hour chart and zoom in on the price action from the last few days. Here we can clearly see the aggressive rally leading up to that $4,059 peak. Following that peak, the price has begun to form a series of lower highs and lower lows, confirming a short-term reversal. News reports attribute this weakness to a strengthening U.S. dollar, which is also seeing safe haven bids, creating a headwind for gold. Technically, this pullback is necessary and even healthy, as the rally had pushed indicators into extremely overbought territory. We are now testing key intraday levels. According to market analysis, immediate support can be found around the $3,944 and $3,931 levels. On the upside, the price needs to reclaim the area around $3,984 and the psychological $4,000 mark to regain its bullish momentum in the short term. Now, let's drill down even further to the 15-minute chart to see what's happening right now during today's session on October 9th. The price action today appears to be largely corrective and consolidative after yesterday's dramatic moves. We can see the market trying to establish a floor after the sharp decline from the peak. Price is currently trading in a range, which could be forming a continuation pattern like a bull flag, or it could be distribution before another leg down. For day traders, the boundaries of this current consolidation are the key levels to watch. A break below the range's low could signal a test of that $3,944 support level we mentioned earlier. Conversely, a convincing break above the range's high would suggest the pullback is finding buyers and could indicate a move back towards the $4,000 resistance. Volume will be critical here. Watch for an increase in volume on a breakout in either direction to confirm the move. Let's pull back to the daily chart to summarize the overall outlook and potential scenarios. The bullish case is fundamentally very strong. The ongoing government shutdown, dovish Fed expectations, and geopolitical risks provide a powerful tailwind for gold. A bullish confirmation on the chart would be for the price to successfully establish the $3,950 to $4,000 zone as a new base of support. From there, a break and close above the all-time high of $4,059 would open the door to higher price targets, with analysts eyeing $4,100 and even $4,200. On the other hand, The bearish case for the short term is based on the overbought conditions and the strong US dollar. If sellers maintain control and push the price decisively below $3,930, we could see a deeper correction. The next significant support area would be around $3,870, followed by the major breakout zone near $3,800. This wouldn't necessarily negate the long-term bull market, but it would represent a much more significant pullback. So, to recap, let's outline the key levels and probabilities. The primary resistance to watch is the all-time high at $4,059. Key support levels are layered at the psychological $4,000 mark, followed by $3,944, $3,931, and the more significant zone around $3,870. Here are a few potential scenarios. The most likely scenario, which I'd give a 60% probability, is a period of consolidation or a slight dip towards the $3,950 support area. This would allow the market to digest the recent gains before the strong fundamental drivers push the price up to retest and potentially break the all-time high. A second, less likely scenario at 30% probability is a deeper correction towards the $3,870 to $3,800 support zone. This would likely be triggered by a sudden resolution to the government shutdown or surprisingly hawkish comments from the Fed. A sharp bearish trend reversal, with about a 10% probability, seems unlikely without a major change in the global economic landscape. Keep a close eye on any news related to the U.S. shutdown and any speeches from Fed officials, as these will be major catalysts. As always, this is not financial advice and is intended for educational purposes only. Trading involves risk, and you should always conduct your own research and analysis before making any investment decisions. Thanks for watching Explain the Charts.